Assalamualaikum warahmatullahi wabarakatuh. Good morning, everyone. We are from Group 1 of Information Technology and Computer Programming. Will be presented about financial data processing using Microsoft Excel. But first, let me introduce myself and my members. My name is Pichar Julian Antonio, and my friends' names are Fadil Rahman and Rakatofau Naswafi Niafo Sarah Linda. Okay, there are 7 contents of this video. The first until the 5th part is the explanation about the formula, and the last 2 part are the case solution and the case study. The first part will be presented by Linda. To Linda, time is yours.
Thank you, Richard. So I'm going to present the first part. As Richard said before, I'm going first to explain about net purchase. Can you please move to the slide? Okay, so before talking about the case, I'm going first to define net purchase, which is the term used for the combination of the amounts recorded in the following general ledger temporary accounts, namely purchases discounts, and purchases returns and allowance. So in order to calculate the net purchase, we are going first to take the purchases. We add the shipping cost, subtract the purchase returns, and also subtract the purchase discount. So now let's take a case. In this case, for example, we can see that the inventory purchase is $200,000. There is the purchase discount, which is $15,000. The purchase returns, which is $20,000, and finally the shipping cost, which is $10,000. So in order to get the net purchase as the formula that we took before, in the Excel, we are going to take the cell B39 plus the cell B42 minus the cell B41, and finally the minus the cell B14. So as you can see in our slide, in the left side, in the step 1, there is the formula already. So in the step 2, we can get the amount, which is actually $175,000. Now let's move to the cost of goods sold formula. First, we have to know that the cost of goods sold is the accumulated total of all costs used to create a product or services which has been sold. So it is derived by adding together the beginning inventory and all inventory purchases made during the reporting period, and then subtracting out the ending inventory balance. But before that, we have to mention that the beginning inventory is the value of the raw materials and finished goods in stock at the beginning of the reporting period. Purchases are made during the reporting period, which include all raw materials, components, and merchandise, which are acquired from other parties during the period. And finally, the ending inventory is the amount counted as being on hand at the end of the reporting period. So now let's take a case. Let's, for example, take a case namely XYZ. It's a company which has a beginning inventory of $100,000. So during the year, this company purchases raw materials and uses labor to produce goods that it sells, and the total value for the same is actually $55,000. At the end of the year, the ending inventory is $75,000. So the formula for the cost of goods sold, which will be, first we will take the beginning inventory and we add the purchases during the year, and then finally we subtract the ending inventory. So in the cell, as you can see, we are going to take the cell B22, which you can see in the right side of the slide. Sorry. The cell B22, you add the cell B23, and then you minus the cell B24 as we respect the formula before. So by doing that, we can get actually the cost of goods sold $80,000. Now let's move to the net income formula. So net income is actually the total earning or profit. So it is the net income the company is generating after paying all expenses, interest, taxes, and dividends to the investor, for example. So it actually tells about the profit or losses of a company and also helps to find profitability and growth of the company. So in order to get the net income like really clearly, let's take a case. In this case, for example, as you can see, there are sales and there are also costs. So in order to get the net income, we are going to use the formula by taking the columns A, subtracting with the column B. So let's, for example, take the cell A6 minus B6. So we can get the first net income. And in order to get the other's net income, we drag it down. As you can see in the right side of the slide, you drag it down so you can get all the same formula for all the cells in the net income section. So that's all for me. Thank you. And Richard, I will let you continue. Thank you.
Okay, thank you for explanation, Linda. And the next two formulas will be presented by me. Okay, the next formula is profit margin formula. Profit margin is known as a gauge of the degree to which a company or business activity makes money. It is expressed as a percentage and shows how many cents of profit has been generated for each dollar of sale. In Excel, profit margin formula is an input formula in the final column. The profit margin on the cell will be calculated. The Excel profit margin formula is the amount of net income divided by the amount of cell, or C column divided by A column to get value in percentage. Now let's take a look to the example. In step 1, calculating the profit margin by dividing the amount of net income by the amount of sales, or C column divided by A column times 100 using the formula C14 divided by A14. And the step 2, we grab it down to get the rest of the profit percentage of cell data. And the next formula is average inventory. Average inventory is an estimation of the amount of value of inventory a company has over a specific amount of time. To calculate the average inventory, we sum the beginning inventory balance and the ending inventory balance, and we divided it by 2. And now let's take a look for the example. Let's take the XYZ company case above. We use the formula B13 plus B32 divided by 2. And we get the step 2. Or we can just use the formula average, open bracket, B30, semicolon B32, and get the same amount. And that's all about my explanation. And the last two part will be explained by Fadil Rahman. To Fadil Rahman, time is yours.
Okay, thank you, Richard. So for the next example, I will explain it. Here's IBC company information during a period. For the beginning inventory is 70,000, inventory purchase is 60,000, purchase discount 5,000, purchase return is 12,000, shipping cost 7,000, ending inventory 45,000, sales revenue 200,000, and salary expense 35,000, utility expense 5,000, and other expense 7,000. Here is the solution. To find the inventory, Okay, to find the net purchase, we need to calculate the inventory purchase plus shipping cost minus purchase return and purchase discount. So here in the table, 60,000 plus the shipping cost 7,000 minus purchase discount 12,000 and minus purchase return 12,000 and minus purchase discount 5,000. So we found the 50,000. So for the cost of goods sold, we need to find the beginning inventory plus net purchase and ending inventory. As you can see in the table, the beginning inventory is 70,000 plus the 50,000 of net purchase and minus 45,000 in ending inventory. So we found the cost of goods sold is 75,000. So for the net income, we need to calculate the sales revenue minus cost of goods sold and minus sales expense. As we can see, the sales revenue was 200,000 and the cost of goods sold is 75,000 minus the the total expense 47,000. So we found it the 78,000. For the profit margin, we need to divide the net income to sales revenue. So as we can see, the net income is 78,000, and the sales revenue is 200,000. And we found the 0.39. For the average inventory, we need to calculate the beginning inventory plus ending inventory divided by 2. So we found it, as you can see, the beginning inventory is 70,000 plus 45,000 divided by 2, and we found it 57 and 500. So here is the data result. As you can see, the net purchase is 50,000, net cost of goods sold 75,000, net income 78,000, profit margin 0.39, and the average inventory 57 and 500. That's all our presentation. Thanks for your attention. Richard.
Okay, thank you, Fadlur Rahman. And that's all about our presentation about financial data processing using Microsoft Excel. Thank you for your attention, and wassalamualaikum warahmatullahi wabarakatuh.